Hey everybody, Mark here at TapeTally.com for your Week 29 recap. Through Thursday, the markets looked pretty good. Actually, we looked like we were going to close on the U.S. markets above a certain key resistance level. However, on Friday, we pulled back quite a bit, about 1% on the Canadian and U.S. markets. Um, Overall, for the week, the results are mixed. We saw the SPY up about 0.5%, Qs up about almost 1.5%. Russell 2000, this is kind of not a good sign here. It was actually down for the week. That means that the majority of stocks are smaller cap stocks. So when they don't move ahead of the other ones, it typically means that kind of it's a risk off trade. So that wasn't an encouraging sign to see that finish lower 1% on the week. Dow Jones up 1/3%. Gold was down. Oil was up almost 5% this week, and we kind of talked about that in previous weeks. That although I'm bearish longer term, we have to expect that that there will be bounces, and we did talk about that about 3 weeks ago. So we could have played that. Overall, so we see that the volatility was down on the week, and Canadian markets were up. However, that's probably mainly due to oil being up quite a bit. So let's move right into the analysis here. Look at the weekly. So I lost my channels here, so let's just redraw them. This is basically how I draw them. Just take a look here. So as we can see here, I'm maintaining my neutral stance, and there's an obvious reason why, because we're stuck right in the middle of this channel. If we get towards the bottom of this channel, I'll probably start to look for spots to start getting a bit more aggressive, trying to catch some falling knives, as you like to call it. These are kind of the spots where nobody wants to get in, everybody's scared. These are the points that you start to pay attention to the market, because it pays off quite a bit if you're buying when there's a lot of fear in the market and it actually holds. Like, this doesn't always happen. Obviously, you try to catch a falling knife, you're going to get cut sometimes. But if you play smart and you manage your risk well, you can start edging into stocks when it's kind of in this area and dipping below and dipping above a bit, and you can see overnight the markets just blast up. We talked about that sort of in here. Kind of on a shorter term time frame. I'm drawing the longer term, but let's just continue with the longer term here before we get any shorter. So if I just draw that other channel, I think I had this on before. This one's a little bit less steep. Same kind of thing here. If it starts hitting the upper edges here, if we kind of extrapolate that further, if it starts hitting the upper edges here, I'll probably start to lighten up, unless we really start to take off and have a pause, then I'll probably change my mind a bit. So if we move on to the Qs, same kind of thing. We're stuck in the middle. IWM is kind of a neutral pattern as well, right? We've got rising bottoms, falling tops, kind of making a wide pennant pattern here. So that's kind of encouraging, because typically the move into the pennant pattern is the move out of the pennant pattern. So we should probably expect there's a high probability that we'll go up from here. Dow Jones, same kind of pattern, right? Gold, this arrow here was basically when I got bearish on gold on this long-term break of the trend line here. And I mean, there's a lot of talk, but it's basically, it has done nothing for the last, I don't know, whatever that is, since May the 11th. So May, June, July, it's almost 4 months. It's basically done nothing. So that's something to keep your eye on. It's a declining volume on a little pattern like this. That's kind of a thick line there, but that's okay. It's kind of a bear flag pattern here. So and the volume's going down here. So maybe the bulls are getting tired of defending this line here. So we should expect to see more downside, basically. Oil, let's take a look at oil. We talked about it bouncing here off this bottom trend line, which it did perfectly. And I would not be surprised, even though I'm longer term bearish still on this until it proves me different. I could see it going back up to about $40 and then, kind of still consolidating here. If we blast up through that, well, I'll change my view. You have to be open no matter what. So if we're breaking this, see, we do have also somewhat of a bit of a pennant pattern, I guess you could. It's more of a descending triangle actually. If we look at this, that's still quite a bearish pattern there. So I mean, I wouldn't change my mind really until we broke this line, consolidated, and had another breakout here on some heavy volume. Then I'd probably change my stance to bullish. Volatility, not much you can tell from the weekly. And this red arrow I drew here was when I became bearish on the when I showed on the videos. Finally, I started showing the ratings. I've been bearish on the Canadian markets actually since it broke this trend line a while back, actually from here, so on this red line. But I didn't start putting the ratings on the overall indexes till I think in early May there. So that's I've been bearish since then. So I mean, the market really hasn't done too much either, and it's kind of just bouncing, and it's consolidated for the last 2 months here, doing nothing, on lower volume. It's summer volume, so there's not much you can do other than take a vacation, really. One thing I wanted to bring up, there's one quote that I like to use, and this is, "No general will risk a majority of his men in a battle that he has no plan for and where he has no idea about his enemy." I'm not sure exactly where I got this quote. I copy and pasted it from somewhere. I think it's from Sun Tzu in The Art of War. I'm not 100% sure, but needless to say, this kind of brings home the point that I've been stressing for the last, 2 or 3 months. And I get questions all the time about stocks here and there, but I always try to make sure that everybody understands that there are certain times in the market where it's good to be aggressive. You don't always have to be involved. Right now, I'm really not that involved. I'm making small trades in the VXX and the gold miners, the junior gold miners, but it's not really a significant portion of my capital, and I'm just really not that interested in the market, to be honest, right now. I do keep an eye on it at all times. So I guess the biggest thing here is we take this quote and let's change it here. So no general, let's change this. No trader will risk a majority of his money in a market that he has no plan for and where he has no idea about his enemy. So we can say, and has basically no edge. So, if we follow this, we can say that right now, let's say for myself, for instance, I'm not going to put the majority of my capital at stake in a market that I have no plan for and where I basically have no edge. This side-to-side market going up and down, volatility, I really don't have an edge here. So I have the one strategy with the VXX, which works well, but for me it's just kind of forces me to watch the market during times when it's just not conducive to being aggressive. So that's something that I follow. Just wanted to share that. And yeah, that's basically it. Hope everybody has a great week, and we remain neutral for the time being. Thanks. Have a great day.